Good hokey pokey Tuesday, everybody. Oh, I mean, turnaround Tuesday, not hokey pokey. Brand, endless, the fountain, my cup overflow. All right. Hey, Glenn, everyone doing okay this morning? James, you, K-Man, we're at full strength. Ryan is going to make a guest appearance here today.
Morning, Dale.
Good morning, buddy. Hey, Paul, Ryan, Mike, Saloom, good morning. Dip looked good from yesterday. Saloom's going to stay long. S&P's up to 6,100 or higher. Marcus, okay. Just a couple of things I've noticed coming in. Vlatko, welcome to F.A.C.E. You found the right place to become an ace. All right. So I'm looking at yields here, and the 10-year looks like it wants to come out of here. If that happens, I don't know what data is around the corner here, but maybe we rally back to 4. I don't think we get back to the breakdown, and I could be wrong. We could start heading lower. I mean, there's no divergence down here. But if that happens, then the debate shifts, and there's already a debate. We already know they're going to ease. So the narrative is at a half or a quarter, and the market will tell us which one it's going to be if yields rally. Not getting a commensurate, getting red candles in U.S. dollar yen. Why don't I start with you, Ryan? You think
Shoot,
we're
mate.
destined to take out this 142 low before we put on any kind of rally here? We have to take this out first.
Um, I don't know. It's gonna.
Yeah.
I'm never one for it has to take a level out before it makes a move. If it's going down there, likely it's going down there for a reason, um, and likely that means the data's probably turned in the US, and the
Yeah.
25 or 50 pip game is what we'll be playing. So yeah,
Right.
I think it's going to take something to shove it down there. At the moment, we've got a little bit of a pause after Powell's speech and setting up September. So I think we're in that little bit of tread water stage until we get the next big bit of data.
Okay. Because I look at this TLT as well. The breakout was like 94, and this looks like could end up being a failing rally where we have something like this from here, and yields tick up right after the most dovish Fed meeting in recent memory. We're getting the opposite moves, and yields are possible. So maybe that meeting, that presser was what? Buy the rumor, sell the fact. Um,
Yeah,
yeah,
the
you
market's
think
been
so?
chasing it all year, hasn't it? The
Yeah,
Fed cut, and now it's
right.
got it. So what does
Yeah,
it do now?
yeah. So who led the cut? Uh, the Fed or the market? Um, let's take a look at Looney. I mean, it's been very directional, no interruption in the trend. That's been, kind of relentless to the downside after it took out 36. I would
Yeah,
think 36 was such a big area that, that we should get some kind of pop from there. Pop
yeah. Well,
to
it was.
there, you know?
I was expecting this type of move down to at least 35, the figure,
Yeah,
because it had been such a big support area. The more people that were
yeah,
buying it, the bigger the stocks were growing below it.
yeah. Okay. So, uh, the nice call on Euro Pound came in. Still going your way. I hope I didn't just jinx it. Take some
Thank
off
you.
just in case I jinxed it. Huh?
Hey, there's a few of us short in euro sterling.
Yeah. Okay.
So it's got a little bit more room. I think we're talking about it pretty extensively on the flow show as well about how well sterling is behaving in general. Um, so yeah, don't change a winning team for now. When whatever Starmer may complain about the finances or so, the market seems to shrug it off and still buys sterling. We could be in for a retest of that 84, the figure 83.90 before the month is over, I
Yeah.
think. That's what I
Okay.
thought yesterday as well. It's no change of tactics right now.
Okay. Aussie, it's been one heck of a move from, well, 4.5 was my entry, but we're starting to approach a couple of things here. You know, you could almost call it a neckline. In fact, I wanted to ask Blake what he thinks about this line here, if it's significant to him.
Oh, about
So,
what?
bro,
I'm sorry.
this
I
line
was.
right here in
Oh,
Aussie, do you think it's
yeah. Actually, I
significant?
think I have it as a triangle. So if you
Okay, I
you
know it.
drop
I
that
got
trend
it.
line not from horizontal, and
Yeah,
you
yeah.
angle it a little bit, and then you take the lows across the bottom, you're going to have a triangle, and we're nudging
An
up against
ascending
it.
triangle. Yeah.
Yeah. Well, it basically is 68 cents is a big deal. And people are probably trading it as a double top, but
Yeah.
I'm just going to say above 68 cents, and I wouldn't want to be short. How about that?
Yeah. Yeah. It looks pretty good.
Yeah, it's
So
looking
yeah,
constructive.
yeah. You have a feel on risk here? Just a matter of time before we, take out this high.
Well, I think the most important earnings is going to be
Oh yeah,
tomorrow.
that's the whole
We got.
market. Yeah, that'll be the whole market, won't it?
Yeah, we got Nvidia, and then we don't forget we have Dell. We have Marvell. So those are AI plays. You got CrowdStrike. Remember the company that took
Yeah,
us all down? I mean,
yeah.
you got a lot of earnings this week that actually could move the markets. And so between that, PCE, GDP data, although I believe it's advanced GDP today, this week. You got a few things that could, or no, it's preliminary. Sorry. And then unemployment claims, obviously, because everybody's watching, employment right now. There are still a few things, and lack of liquidity. It's the last trading week of the summer, and as most of you know, next week is basically the beginning of the trading year as far as we're concerned. So this week of a lack of liquidity could really move the market if the market wants to really point in one direction. We could really get a move. So
Yeah, because the hedge funds are all in the Hamptons. They'll be coming back after Labor Day.
well, Stelios is still in on some beach somewhere, and that's
Yeah.
what happens. I mean, Ryan, we fortunately got Ryan back a little early. Welcome back, Ryan.
Thanks, mate.
So yeah, we got some Europeans back, but a lot of them are still vacationing. A lot of people are still just vacationing this week, and running it out until the Labor Day weekend. And once we get past that, next week should be good. Speaking of which, we have some end of month flows, which from what we're seeing is a little bit of moderate US dollar selling. Ryan, K-Man, have you guys seen anything different than that?
Not me. I haven't seen anything on the month end yet. Don't know if Kay is.
No, seems like yeah, majorly dollar selling versus quite a few currencies, but as I said, still have to get over the hump of tomorrow's value data in a month, and then we will see.
Yeah, so maybe we'll get some corporate month end flows. And I gotta say, if you guys haven't seen this, Dale, do you want me to take over here?
Yeah, go ahead, bro.
Okay. So one of the things that if you guys haven't seen this, and I want to share it with you, just so you guys all do and are aware. This is our, here's the ForexAnalytix chat room. I want to show you guys this. This is just this is retail sentiment in the euro and sterling and yen. You can see how lopsided how many retail traders are just selling sterling into this breakout. We're breaking out like today. I mean, we've been breaking out this whole week. But you can see that's happening. There's still everybody's retail's trying to be long dollar yen down here, and that's starting to turn more into a contrarian move. You got the euro dollar that's very, very, lopsided. Everybody's trying to sell into strength, and they've been right this week. I mean, I'm sure a lot of people that are short euros are just like really happy with the price action yesterday. But where are they short at? I mean, my assumption is going to be a lot lower. So we're still in breakout territory as far as I'm concerned. So these moves, when you talk about like the Aussie, this is what I was looking at, Dale, just so you can see it. There's the this is the little triangle,
So
if you
you
will.
also have that dotted trend line right there too. So you have kind
of that's the major one, right? That's the multi-year trend line that comes
that's
in.
where
But
we're going
that comes
back
in.
to.
It's 69 cents. So
We're going back to 80.
yeah, I mean, it looks possible, right?
Yeah.
It looks really possible. But on the Flow Show today, if you guys don't listen to the Flow Show, you got Ryan and K-Man. You got Ryan, he's back. You guys were having a conversation this morning about the jobs report. So Ryan, why don't you give the people at home listening in some flavor on how you're feeling about the U.S. jobs report and what it should signal to us should there be a weakening of the jobs report.
Yeah, well, we were just talking about it in context of rate cuts and how the market's really tying rate cuts to the jobs market, where perhaps that's not really what it should be focusing on. Obviously, if jobs are weakening, that suggests the economy's weakening, but there's nothing in the broader economy to say that there should be some massive job losses. But when you're looking at the NFP, it's a bit of a lottery, so we can get a stinky one. So it's just being a bit careful, not getting too caught up in the jobs part of the sum, if you like, when talking about rate cuts. Not that the market is going to do anything differently. It gets a bad jobs report, it's going to crap out. But when the jobs market turns, it tends to potentially trend. And cuts aren't going to do anything to that. So, if we get a bad NFP next week, a down 200k and the Fed cut rates by 50 pips, you're not going to see the jobs market improve the month after. It doesn't work like that. So you can't, as I say, you just can't get too tied up tying the jobs to rate cuts.
Yeah, that's a great point. I mean, if it's kind of like sentiment is and the jobs market, they're not. It's like trying to turn the Titanic, a big ship. Rate cuts aren't going to do anything. But if jobs continue to weaken, that would signal that the Fed could be more aggressive in their rate cut campaign. Wouldn't you agree with that?
Oh yeah, that's what the market will do. But if we get if jobs fall by 200,000, say next month, okay, and the unemployment rate goes to 4.4, 4.5%, the market's going to be all over a 50 basis point cut.
Sure.
Or if we get another 200k the month after, and but the unemployment rate stays unchanged, is that going to be? Are we going to get 50 pip cuts? Are they going to cut 150, 200 basis points by the end of the year or January, just on the back of the jobs market, when the rest of the economy is doing all right?
Yeah, no, I would agree that that's probably not going to be the case. But, that's when everybody's like, okay, now you have a combination of weak jobs, and we're just making an assumption right now. But if you had a combination of weak jobs, disinflationary data still is, being disinflationary. You got, and maybe some of the other data starts to turn south, like consumer sentiment or maybe retail sales. And that's when you start putting it all together going, oh my gosh, what's going to happen with what's going to happen in the future with the economy if all the data points are turning south, right? It's not just jobs. Yeah.
Yeah, that's the point. We're not got everything pointing, falling off a cliff.
Right.
But the NFP tends to do that. It doesn't tend to. It's always extreme. It's either a big number or a bad number. Very rarely does it sort of bump along in between.
All right. Well, I want to ask. Thanks, Ryan, for your input. Dale, I want to ask your input. What you think is going on with the Middle East right now? Because if you look at like the dollar Swiss, for example, it is near. I mean, this is near trend lows. I mean, look at the long term. Like, this is an ugly ass chart right here. I mean, we are really looking like the Swiss franc is just going to, break through these trend lows. Look at the Euro Swiss.
That'd be a third drive down there, Blake. You have 1, 2, 3. Yeah.
It may be. I mean, you gotta have some balls to be buying, some of these levels. Like here's a Euro Swiss. I mean, I don't know when's the last time have we even been down here below here? I mean, I'm asking for a friend right now. I mean, the last time, well, I guess it was when they removed the floor there. But I mean, this is ugly. And anyway, what are your thoughts about what's happening in the Middle East?
Well, I didn't think Iran was going to be a one-off, and there could be a quiet. I mean, nothing break out. These wars tend to break out in the Middle East over the high holy days in Israel, which is October. You had the Yom Kippur War. Things at times really break out over the holidays when people are they're down, and thinking about other things. Wars aren't going anywhere. Brand says, I hope you're right that nothing happens. I really do. But I'm bullish oil for that reason. But it came out of Libya instead. I think it's one of the strangest stories I've ever heard, that there's a force majeure in Libya over a central bank issue. Any of you guys read about that?
No,
Okay.
I've not.
Well, okay. Anyway, that's why they stopped producing. So over some controversy with their central bank. It's really a weird story, and I don't really understand it, but that's what lit up crude yesterday. I still think it looks good. But okay, Mike says the holidays start October 2nd. So maybe every election cycle they talk about an October surprise, and it's usually some kind of scandal. That maybe the October surprise is Geo this time around, which
Oh,
will
maybe it
really
is.
make a chaotic situation much more chaotic. Can you imagine, this election and having something break out in the Middle East at the same time?
Oh, I think volatility, as you guys know, I think volatility is going to be so high. I mean, look at what's happened this summer, and summers are typically very slow, and that's why I've been harping on. Look, if you haven't taken a look at the trader funding program, then you got to do it, because this is you want high volatility, enable to give you opportunities to pass like an assessment. So if you guys lack funding as a trader, check out the trader funding program. This is like the perfect time to be involved in doing assessments, my
What
opinion.
a seamless segue, man.
Well,
You're really
I'm
getting
telling
great
you,
at it. Go ahead.
what was really great is on Friday, we can tell when people are poorly positioned in the markets. And when we had that big breakout in the euro, or a big breakdown in the dollar over the weekend, then we had actually multiple people pass assessments go into live accounts, and no one failed. So that means people were very well positioned into that dollar move, which was really nice. Hey, speaking of which, I want to, since Ryan, you were on holiday, this is a great way to ask you,
put him on the hot seat, man.
What your opinion was of the dollar move following Powell, from I don't want to say an outsider looking in, but somebody who, you were a little fresh, you're away from the markets, but coming back, listening to what Powell had to say. What are your thoughts on the dollar, moving forward?
Yeah, I think we've hit a stretch point. There's euro dollar you've got there. Last week before I went away, I said 112 is my level, and I'm short into it. it marks a real big range top. We had the 110, 111, and this 112 sort of caps it. So we're not.
Wait, so this is you. You're making up that whole liquidity right there being short. Just kidding. I'm just giving you a hard time. All right.
Maybe. But it's a multi-year level. It marks the sort of top of the year's range. Well, going back quite a bit, it's actually through 2023 as well. So I don't think we're quite breaking out yet. Above 112, 112.75 with 61.8 fib, then we're looking, then we might be cooking. So yeah, 112 was my big level, and it seems to have held for now. So it looks like we've stretched the dollar selling into that, and now we're just playing the 25-50 game in terms of cuts. And there's a couple of pairs, Kiwi as well. I'm still long a bit of that. We're just trying to break above this 60 level, 62 level, 62.20 level. Again, it's another, if you look way back left, it's a level that's pretty much marked the top all year, and we're trying to break it, but it's looking a bit 50-50 on the fence at the moment. So we've got all these big levels in play, and particularly for something like cable. I was saying on the flow show this morning, you need to get a clean chart and go into your weeklies and monthlies and look at the moving averages, because we're starting to get up towards levels that we haven't seen for many months, even years.
That
really big.
That is a great point, and I'm a firm believer that this low right here is generational. That happened in Asia. That was the Liz Truss, moment, if you will. I don't think I don't think in my time I'll see that level ever again. One of those types of, when I say generational, it's usually marks a 20-year low. This reversal here has been pretty great. I mean, you start breaking above these weekly levels that we're talking about right now, and I mean, it opens up a lot of upside. And then you take this, this is back. I miss those days when we were trading up there, or in the twos.
Well,
I mean, look. I mean,
dollar has spoken.
The dollar has spoken. There we go.
Yeah, stick that one on a monthly quickly, because you can see on the weekly we're above the 2 moving averages there, but we've got a potential for opening up above one of the big monthly moving averages there.
Yeah, it's a 50 period.
And look at the last time we sat above that. These moving averages, as I say, they have a lot of power, but you have to then mix it in with the levels you look at your shorter term charts.
Sure,
it's the confluence.
Sure, yeah. I mean, these are big ones, and I agree with you. We're at a lot of key levels, and I think the dollar. I mean, obviously, as you guys would probably all agree, it all has to do with the economic data. I mean, starting with this week. I mean, starting with today. I mean, we have consumer confidence. How about if consumer confidence today starts to wane? Richmond Manufacturing Index is supposed to get a little bit of bounce back from being, I think last reading was, -17. We're supposed to get, some sort of recovery. Later on this week, we got, GDP data. How about if that GDP data starts to show some, preliminary GDPs, dips down towards 2 versus, 2.8% expected, or, you maybe the price index slips and we get more disinflationary data, pending home sales, weekly unemployment claims. These are all the data points that are hitting this week. They're second tier. I know, most of you would be like, well, this is data that typically doesn't move the market. But as you all know, and you should know, the Fed is very sensitive to this data right now. And, all this data cumulatively, gosh, it's so early in the morning, could really, put some downside pressure on the dollar, especially if it all starts to turn south, which, everybody and their mother's, brother's, uncle's monkey has been.
No one's bearish anymore, Blake.
No, they've been forecasting recessions forever. Everybody.
But no one's bearish of the stock market right now without new highs or anything. And Trump needs a bear market to win this election, in my opinion. He needs
so?
I think he needs a market sell-off so that people get scared. Yeah, because if the market's, I think if the market's trading in new high ground, people, besides the hardcore, we're talking about just the middle, very small percentage. Most people have made up their mind, okay? But that small contingency would rather see their 401ks in good shape going into November instead of facing drawdowns. And
sure, and I have to say, I mean, we're less than 1% away from the all-time highs in the S&P.
get it over with already.
Well, yeah, it's like, well, I would assume that in here you can just look at volume down below. And here, I'm going to put up these panes. Oh, that's bad. Let's do it this way, and let's do it this way. All right, I would assume if the S&P here breaks into new highs, we're going to push into new highs on very low volume. Yeah, I think volume is going to be really light. So a new high is probably worth selling into in the next couple of weeks as we go into September. September seasonally is a very bad month for the equity markets, and on top of that, it is. I mean, as you pointed out,
Green Day wrote a song about that seasonal.
Really?
Wake me up when September ends.
Oh yeah, that's a good point. They did.
They must have traded.
So the thing about that, Dale, though, is we literally have this huge election, a lot of uncertainty, and we're going into September. So I think if you guys really want to be short equities, you do it closer to 5,800 if we see it, right? Like, but you got to let the market do what it's going to do. And this week, after NVIDIA, I mean, look at NVIDIA. NVIDIA is basically the market. I mean, it's 10%.
And it looks like it should have a new high unless it surprises.
Well, I mean, does it ever not surprise? I mean, we're at a very big pivotal area here in NVIDIA, but if we break above, 131 post earnings, and you could have literally
a heartbeat.
Yeah, we could have a 10% move. Like
pull up the NASDAQ 100 daily. Because if we didn't have that big event, it looks just like I'm just saying, could be a failing rally. Couldn't quite get to 78.6. So, if you covered up the title, you might be a seller up here, at least looking for a pullback of this recent advance anyway. So, that's the worst looking chart, which is important because it used to be the best looking chart.
Yeah, it definitely has been leadership, but you could see it's coming out of an ascending wedge, but are we just flagging?
Yeah, we could be. Yeah,
we
probably are.
Yeah,
it would surprise me if it failed from here, but I'm just saying I have to be objective and say, well, compared to other indices, it was the weakest rally.
Got it. Well, hey, let's go around the horn. Ryan, what are you looking at now that you got fresh eyes on the market? What are you looking at today?
I'm looking for euro dollar to get below 111.50 as a first step, then 111.30, and then maybe even take out the big figure. That's what I'm looking at for that one, and then just managing the rest. Yeah, I'm in two minds what to do euro sterling if we get down to that 84 level. It's going to be probably a lot determined on what euro dollar's doing at the 112 as to what to do with that one at that 84, 83, 85 area.
All right. Yeah, we're coming down to the 78% retracement. Since I only asked for one idea and you gave me two, I'm going to let you slide because you've had a few days off. K-Man, what's your one idea today? One thing you're looking at today?
Okay, I can only choose one, right?
Yes, sir. Just one. Don't give it all away.
Do three.
Give them all 8, please. Just give every idea.
I've picked up small dollar yen, watching the lows of the day and that 144.15, but it's a very, very short-term trade only.
Okay, well, we're holding that 78% retracement. Maybe we do make a higher low. Since I've got you here, and you're talking about the yen, is Tokyo CPI this week gonna matter on Friday morning?
Well, it should, but we've seen the the core Bank of Japan CPI come out a bit lower overnight, and it didn't really matter. So I don't know. I mean, it all depends on whether we take that direction for lower data. It may matter a little bit, but since Bank of Japan already added the wages to their monitoring list, perhaps that CPI, unless we get far away from expectations, is not going to matter too much.
Got it. All right. Well, one for me really quick, and thank you very much, K-Man, is just Euro Sterling, or Euro Sterling, excuse me. Euro Swiss looks really weak. We're on the 38% retracement. I'm short from last week when we came to this level. Most everybody knows that because I've talked about it on the week ahead video and everything else. But it looks pretty weak, and with Russia and Ukraine situation heating up, with Middle East situation not getting any better, and I think there's a risk that we push down towards 93 cents in the days ahead. So and we're probing the 38% retracement right now. So, and Dale, I know you have an interview with Angie, but what are you looking at today?
Well, I'm hoping Ryan's right about counter trend stuff here. And 102, 102.50 in the Dixie is a sell zone for me. So I'm waiting for that to add to dollar shorts. I want to stick with the girl I brought to the dance.
All right. Well, maybe the next girl that'll come to the dance with you is Angie from the Goddess of Grain. So I want to say
another great segue.
Oh man, I'm full of them.
I tell you, man, we ought to have a TV show. Anyway, go.
Hey, you guys make sure you check out ForexAnalytix when you get a chance. You got a tool with, you got your risk management tool, Live Squawk. You can be in our chat rooms. You can talk with K-Man, Ryan, and I, and a bunch of other traders all morning long or all day long, and share ideas with everybody here and what they're looking at. It's a great community where you don't have to worry about being trolled.
And it's fun. It's fun to interact.
We're just talking about markets. We're just having conversations about markets and what's going on, and what everybody's looking at. So anyway,
don't be a hermit out there, guys. Do not be a hermit. You'll get locked into your own head. Don't do it.
That's right.
All right.
All right, Dale. It's all yours, buddy.
Thanks, team. Ryan, welcome back. When are you leaving again?
Tomorrow.
K-Man, I hope I didn't give you a headache today.
No, that's fine. Everything's going.
All right. I know I give you headaches sometimes. Anyway, thank you, Dream Team. Nice job, everyone. All right. So now we're going to talk about the biggest bear market with commodities going crazy forever. Welcoming back Angie Seltzer, goddess of grain. Goddess. Why do your grains keep going down?
Oh, I don't know. But we're getting pretty close to what we like to call the LinkedIn low. And in grains, where you tend to have people in my position, farmers, anyone in agribusiness, it seems, thinking about what they could be doing with their life that's outside of agriculture at this point.
We got to be close.
Yeah, that's what I'm saying.
So, Angie, what surprises me is now you have a weaker dollar.
Mm-hmm.
So are the crops that good? I mean, the divergence in corn, it's just been grinding it out. It hasn't been a lot of price damage, in months if you want to go long term. But it certainly isn't a market that, I'd want to be getting short down here.
Mm-hmm.
Here's your, look at, we just made new lows. This is glaring divergence. What's going to be the match that lights the fuse for this?
I'm going to be watching. I think, there's a lot of questions, obviously, about what we're going to see with world demand. I think, we could potentially be underestimating, how much business the U.S. can capture when it comes to world demand. There's quite a few production issues or production reductions. The USDA, currently could be overstating global corn production by about 500 million bushels, give or take, just looking at official government estimates versus what the USDA is currently projecting. And that's going to result, if you look at the US, we're the cheapest, highest quality, most readily available supplier in the world, especially if we see the dollar kind of continue to see some pressure or something like that. I think that's part of it.
Will China
But
come back? What would bring China back to our markets?
that's what I was
Anything?
just gonna say. Yeah, well, yeah, I think,
Yeah,
I
I mean,
think
I price over ideology when it comes to everyone in the world, right? I mean, even if it's not your good friend, if you're
100%.
getting better prices, you buy it from them.
Yeah, and on top of that, I mean, I think, and I actually was just getting ready to send out this morning's comments, and one of the items that I put in is that, this is a bit different. Our approach to trade, or the world's approach to trade with China, is a bit different than what it was, at the start of the first trade war. We just had Canada come out and say they're going to levy 100% tariffs on Chinese electric vehicle imports. They're going to levy 25% on steel and aluminum imports. You've got the EU levying tariffs on Chinese imports, and some of these other things that you're seeing where, we're not the only ones out there kind of, quote unquote, poking the bear, so to speak. And so I think that, in that in and of itself, China's going to have to look to us simply because there are quality issues with the Brazilian crop, what's left there. They've got some protein problems, potentially limiting their ability to export much else. You could see an increase in needs of blendable supplies as well. But I think the biggest thing that you need to see right now is China figure out how to support their consumer, or, really kind of work to rebuild consumer confidence. And so you have seen a push, from state economists or state-backed think tanks, economists from state-backed think tanks, and seen it in China Daily, where there's a push for direct to consumer stimulus. And I think that's the catalyst we could possibly need to see in order to get commodities to kind of turn around, perhaps
Who's going to do
reintroduce
that?
this idea of
China?
inflation.
Who's
There
going
is
to do
talk. They're trying to get them to do it. I mean, I think at this point, everything that
modern
China's been
monetary theory?
that's try to introduce some. I mean, and China was really one of the only major countries that didn't, major economies, excuse me, that didn't do that during COVID.
Okay.
So it would be interesting to see if they kind of work to term out local debt, and work to directly stimulate the consumer in some way. Though Xi is totally against that. So, like, I want to say I'm not an expert in Chinese economic theories by any means, but it's something that we have to be watching, because I think it could be, you ask what the catalyst could be, and it would be this idea that Chinese demand isn't complete garbage, because that's kind of the narrative in the market right now.
Guys that are watching this video that trade other things like S&Ps and bonds. I mean, I look at these charts, and I'm not saying, excuse the pun, bet the farm, but I even saw a video by Doug Casey, who's pretty, a legend, and he just said he was looking at the grains, and that was a few weeks ago. So, I've been looking for a low here forever in these grains,
You and me both.
especially after the pullback, the huge pullback we had from the war, started getting constructive in here, but it's just been grinding. Hasn't been a collapse, it's been more grinding. What about the wheat? What do the fundamentals look like on the wheat here?
Completely the opposite of what market action looks like, to be honest. I mean, one of the things that's odd in wheat right now is that we are working to kind of put away the newly harvested northern hemisphere supplies, with the idea that southern hemisphere harvest is just getting underway. And so that is one of the things that tends to weigh heavily upon wheat, this time of year. We see a lot of farmer hedging that needs to take place, and we see a lot of, typically would see a lot of end users come in and look to try to source cheap supplies. One of the problems that we're seeing right now is that the end users really aren't looking to aggressively make purchases, simply because they kind of have some sticker shock. Like, we've seen the wheat market, not really have a substantial amount of cash carry in it, to where, you were looking at prices exceptionally more expensive 6 months down the line than what they were here in the nearby time frame. this year you're really seeing it. I mean, if you look out, anyone that's holding on to wheat is going to want to get paid to hold on to it. And that's part of the reason that we saw the GASC tender kind of come out, and they really didn't make these large purchases that folks were expecting, simply because they were kind of wanting to get today's prices 6 months from now, and that's impossible in grain. So you've got to add, minimum 7 cents per bushel per month just to hold it. And so we're just kind of seeing this sort of misalignment at this point in the market structure itself. But if you look at it from a fundamental standpoint, you've had Russian production reductions, pretty substantial production losses. You're seeing some continued issues with their spring wheat production and potential losses there. France is looking at their worst wheat crop since 1986. And so I think that says something. Germany's falling closely in their shoes. You're looking at potential reductions out of Argentina and Brazil. There's a decent crop in Australia, but I mean, around the world, global supplies are going to be much, much lower than what we've seen here these last few years. Just as we kind of encounter this sort of escalation between Russia and Ukraine that could really, kind of turn how we're moving grain out of that region on its head potentially. It just hasn't yet.
Supply chain and production problems in Ukraine that they've been able to stave off. I remember the first year of the war, it showed, bombs going off and farmers working their fields at the same time. But they've been able to produce surprisingly, right, over the last couple of years, pretty well.
Yeah, you've seen some pretty substantial, subsidization, but you've also seen a containment of the war. One of my theses over the last couple of years, and the reasons that the market hasn't seen the influence on food prices that we thought we would see, is that we were really able to kind of contain that war to eastern Ukraine. It was almost like we had lines drawn, and we weren't really impacting those. We also had really great air defense systems put in place, across much of Ukraine and some of these other things. But now, as the situation tends to, one of the Kursk is a breadbasket, in Russia.
Yeah.
Like they are.
Okay, I didn't know that.
Yeah, they're a large producer of grain. It's one of the best production areas in Russia, and so the market being completely complacent in all of this it has been somewhat mind-blowing to me. But I also understand, if you look at the cash market for Qs, we still have readily available supplies in a lot of places as we wrap up harvest and work to try to put this stuff away.
Okay, that's really interesting to know. Because that could, I mean, for years it's been the Ukrainian farmer under pressure of war disrupting his livelihood, and this has kind of turned the tables. I mean, so there's leverage with Ukraine taking over if they can hold this area that could affect Russia as a whole because of grain supplies.
Yeah, I mean, I'm not going to go so far as to say it would limit, Russia's ability to produce, but it would definitely cause some issues, especially if we were to see, Western countries start to give permission for the use of weapons further into Russian territory, I'm not an expert in war by any means, but like I said, how complacent the market has been about the Russia-Ukraine situation has been quite surprising to me. And this is coming from someone who thought we overdid it in the first time around. You know what I mean? Like when the invasion itself happened, I was one of those that was like, stay calm. We're always going to be able to move supplies to a certain extent. But you could start to really discuss, supply reductions out of that region here over the next year or two in a big way, especially if the situation doesn't calm down.
Okay, well, really it's fascinating how geo stuff plays into, every aspect, especially agriculture. Someone's asking, and I already know the answer to the question, Hamashu, that grains are your specialty. Do you follow things like cotton, cocoa, coffee, softs?
We'll watch the softs. I watch the softs. I mean, right now the coffee story is the drought in Brazil that you're seeing. When it comes to cocoa and some of the others, I just watch out of the peripheral more than anything. But they have their own unique supply stories. more than anything. Cocoa is kind
Okay.
of very different than corn in the sense that next spring we'll have another round of opportunity to plant corn that we'll harvest the following fall. Cocoa is really one of those that, from what I understand, it takes time to be able to build supply. It's not necessary, so there's a lot of little factors at play there.
Okay. So anyway, take a screenshot for your clients that
Right.
this is where I think that, remember last time I said I
Hmm.
think you're going to get a lower dollar. Maybe that'll help, but so far, then at least maybe it's stabilizing things.
Oh,
So
I think
take a
so.
picture because I
Right.
do think we're going to take out par eventually. I think there could be
That's,
about,
go ahead.
I'm talking about a seriously lower dollar here, Angie. Really, if we start taking this out, um, we could go to, first maybe 97, but we could see a 90 handle on the
From
dollar
a,
next year. That's got to help, right? JD
yeah,
Vance
I was
kind of
gonna say,
philosophy. Huh?
yeah, from a selfish standpoint, I hope that's the case. I'd like to see the US kind of come back and be one that is able to I want to see us maintain a competitive stance in the world market. And I think a lot of folks right now are kind of writing the US off as an exporter. And I think that is a bit I just don't think it's a smart idea at this point because I think we have the ability, we have the quality, and we're reliable in ways that some of our competition isn't. So,
And we're going to
um,
offer a foreign exchange sale on all of it.
yes,
We're already down 5%, and there's maybe another 10 to follow or so. That's got to
yeah,
make U.S. grains attractive.
it's definitely helped. That's part of the reason that you've seen soybean purchases on the rise here. By China. Obviously, it's seasonal, but it's helped firm up their margins as well. But that is one thing I want to mention on soybeans that is interesting for the audience to be paying attention to. There's been a lot of conversation as of late about U.S. processing capacity and how it's misaligned with U.S. Biofuel demand potentially as we move forward, especially in soybeans. It's been part of the reason we've seen soybean oil, really kind of fall off in big ways, and it's been some of what has pressured the soybean market in general. One thing I want to caution folks is that we are seeing a pretty rapid growth in global biofuel blending rates. Like we've seen Indonesia go from 35 to 40 to now there's talk that they're going to work towards 50. They're the world's largest palm oil exporter. And so if they start to really kind of put their demand, more domestically driven, that's going to influence world vegetable oil supplies. We're also looking at
Yeah.
India bumping up their ethanol blending rates. That's helping the US with ethanol exports and other things that, a lower dollar will help with. And so I do think it's important, to kind of pay attention to a lot of the factors at play. And like I said, I mean, the market structure itself has been so poor, but I think the fundamentals overall really kind of point to, some potential bullish transitions, especially if we get into harvest and the crop isn't there as much as what folks are trying to expect it to be.
So I want to ask you about that. Are the crops made at the end of August, or could there still be problems?
There's still problems. I think if you look at August as a whole, it's been one of the drier stretches of weather that we've seen. Finishing weather is one of the lesser important factors. Like you're not going to see a 20% yield loss, just because you have a little bit of a drier August or something like that. But you could definitely see a downturn. I would caution, anyone that's really kind of just using that 55 bushel the acre estimate from Pro Farmer that was put out last week, as a guide. I'd be really careful in that. Especially with this dry stretch of weather that we've seen across Illinois, Indiana, Ohio, and into parts of Iowa. There is no real drought concern by any means, but you can definitely lose 5% or so relatively easily without even trying with a dry finish. And so to me, I think the risk is there that you could see the USDA potentially come out with a touch higher yield figure in September, but I would anticipate you start to see that getting walked back here as we get into October and November. And I'll be really just paying attention to basis and spreads as harvest progresses, and that'll kind of tell us the true story of what's out there.
You would think you would at least send me a T-shirt after all
I
the
know
years
I've
I've
got to get
interviewed you.
some swag out there.
I wear it on, I get, I'm on a lot of programs.
Right.
I'll wear it for you. Anyway, listen, Guys, it's really amazing how cheap the grains have become. Just imagine what kind of inflation problem we'll have when there's a bull market in grains. And we know one day the dad hat, nah, yeah. All right. Anyway, so Angie is a great follow. Look at what we learned today. About where Ukraine has invaded the breadbasket of Russia. You don't hear that on the news. So, Angie, anything you want to wrap it with? I think that we'll be talking about a different market going into the end of the year than we are today. That's my call.
I'm on the same, yeah, I'm on the same side with you. I think that I'm trying not to let recency bias cloud my judgment. But I do think that 2020 could be a bit of a, I think we could see a soft repeat. I don't expect the whole entire thing, but if you look at 2020 price action and some of that, we really overestimated production and underestimated demand in a big way that year going into the fall. And I think you could see the same tenets in this year's trade in a big way.
And I think bottom pickers got to be worn out. I know what it feels like to be worn out when you keep trying to pick tops and bottoms, and then you get a little pop and you think this is it, and then it's not. And I've been through those baton death marches before.
Yes,
so
that's what it feels like.
I would say that if there's a grain bull left, it's you and me.
And we're sad. I'm sad. I don't even like myself right now. I'm sick of hearing it.
All right. Well, Angie, always appreciate you being here. I hope your business continues to grow. And I think that your years of growing interest in the grains, and that wasn't supposed to be a pun either, but I think you're going to be getting real busy in the next year or so.
I hope so. I think so too. So I appreciate it. Thanks for having me.
This one guy said something keeps sticking in my head, that we're going to have deflation in things we own and inflation in things we use. Do you understand the difference? Like our assets might deflate.
Super interesting to think about.
But things that, have to be replaced and you use, food, fuel, all those things aren't going to get cheap. So it's a great year, I think, ahead for these grains with what the dollar did. Appreciate you, Angie, coming here all these years to talk about your markets with us.
Thank you for having me. I love coming on.
All right, there. We'll wrap it with that on an uptick from Angie. Got it. Follow Angie and go to her website right here and get some gear and become a farmer. Learn. I remember Jimmy Rogers saying many years ago when commodities were cheap, he said, the guys that are going to be driving the Ferraris are the ones not with an MBA on Wall Street, but know how to drive a tractor. How about that? All right. So you guys are due. So that's a wrap, everyone. Good hunting the rest of the day. And I'll see you guys tomorrow. Angie, thanks again. You can follow Angie on X at Goddess of Grain, and keep this in your sight, what's happening here. I mean, Saloom even bought, he liked the bean chart and he just clicked his mouse. All right. So thanks, Angie. Okay, Angie's gone. And everyone else, thank you guys. See you tomorrow. All right. Adios. Don't just count your ears of corn and your pods. Count your blessings.